Ladies and gentlemen, welcome to this steaming hot pile of drama. In today's video, we're going to talk about David Einhorn, a hedge fund manager, taking massive shots at Elon Musk, as well as we have some news about the Apple car coming out of Korea. And of course, Robinhood is in the news again for being a debacle, again, allegedly, in my opinion. This might be inaccurate, might be wrong. This might be the ramblings of a madman. You gotta do your own research, allegedly, blah, blah, mother effing blah. So first of all, let's start with Elon Musk and David Einhorn. Now, David Einhorn is a hedge fund manager. And in this video, I want to tell you exactly what he said about Elon in the letter he sent out to his investors and pretty much to whom it may concern. And he was actually addressing the whole GameStop issue, blaming Elon for that. Now, I should preface this by saying that David Einhorn doesn't really like Elon. He has a very long and interesting history of taking shots at Elon that kind of seem personal at this point, so I wouldn't put a lot of weight on that, but there's more. The real jet fuel on the GME squeeze came from Chamath, Palihapitiya, and Elon Musk, whose appearances on TV and Twitter, respectively, as a critical moment, further destabilized the situation. Chamath controls SoFi, which competes with Robinhood, and left us with the impression that by destabilizing GME, he could harm a competitor. As for Mr. Musk, and by the way, why the hell are you calling him Mr. Musk? Mr. Musk is his dad. Everybody calls him Elon. We are going to defend him half-heartedly. If regulators wanted Elon Musk to stop manipulating stocks, they should have done so with more than a light slap on the wrist when they accused him of manipulating Tesla shares in 2018. The laws don't apply to him, and he can do whatever he wants. Okay, so the proper response here would be, you mad, bro? But since this is a financial channel for grown-ups, let's dismantle this man's argument. So first of all, he's definitely salty. I don't know if he's jealous or whatever. But let me just ask this following question to you guys, right? David Einhorn is saying that Elon Musk and Chamath are douchebags, right? That they're manipulating the market. Well, he's a hedge fund manager. So you have a hedge fund manager essentially claiming that Elon Musk and Chamath are the reason for the GameStop debacle. While all in all, basically what happened, Mr. Einhorn, is that hedge funds shorted 150% of GameStop, essentially almost collapsing the US financial system. So you have a hedge fund manager trying to put the blame on Elon Musk because of some tweet and Chamath because he bought $500,000 of options and tweeted some shit, instead of talking about the guys who really made this happen. It almost sounds from what he's saying here that the hedge funds were innocent bystanders getting screwed by Elon and Chamath. Oh my God, the evil Elon and Chamath have screwed us all. No, motherfucker, they haven't. They tweeted a bunch of nonsense like they do most of the day. You guys, the hedge fund managers and the hedge funds, are the real culprits here. The greed of the actual hedge fund industry, and specifically the greed of the people who participated in the massive short of GameStop, are the ones who caused this. Now you trying to shift blame to somebody else just stinks of hypocrisy. Now, furthermore, I don't know how good your advice is. I'm sorry, just my opinion. Might be inaccurate, yeah? But listen to this letter. This is a letter you sent 2 days ago. But again, and also plus, I don't even know what to make of it because I don't know how good this advice is. This is the guy who manages Greenlight, right? Greenlight put out this letter on April 15th. Look at the first line of this letter. The Greenlight Capital Funds, the partnerships, returned negative 0.1% in the first quarter of 2021 compared to the 6.2% of the S&P 500 index. You literally underperformed 6x the S&P 500 as a professional money manager. Your only job, motherfucker, was to basically beat the S&P 500. Otherwise, I'll just put my money in the ETF. So basically what we have here is somebody who generated negative returns for their investors for the first quarter of 2021. Not only that, this fund actually underperformed their main competitor, which is the ETF of the S&P 500, by 6x. You literally produce 6x less money than the actual index. All in all, while being a professional money manager for clients who pay you a fee to be better than the index. So all in all, given the fact that David Einhorn has been known to be a hater of Elon, given the fact that he's underperforming the S&P by 6x, given the fact that hedge funds are the ones who caused the GameStop debacle, now to hear these complaints coming out of hedge fund managers towards Elon Musk is laughable. That's all I gotta say about it. The next piece of news is coming out of Apple and Korea. We have this article right here. Has Apple Car found its manufacturing partner in LG and Magna joint venture? Anyways, so this is the article from the Korean Times. Essentially, what they're saying here is that Magna and LG will be the ones who actually will be producing the car for Apple, which is kind of different than the original model of doing it with Hyundai, but I guess it's all in negotiation phase. Now, you probably heard about LG, they're a Korean company, and they'll do the batteries, which is kind of the gold standard of the batteries for the EV industry. Magna, you probably haven't heard about, but they're massive. It's not some cockamamie company. It's a Canadian company, $30 billion, billion with a B, 150,000 employees around the world. And what they do essentially is they actually make cars for a living. They produce automotive parts for everyone. So they know how to build a car, and if they get a good battery from LG, that actually makes a lot of sense. But again, what does Apple bring to the table? Not really clear for me. Also, this is just a rumor. I don't know if this is actually going to happen. I don't know how founded this information is. So you got to be careful. I wouldn't go around buying stock based on these types of rumors, but it sounds kind of reasonable to me if that happens or not. Now, the last piece of news is actually coming out of Robinhood. As if we're actually going back in time, Robinhood halts trading again because of insane demands. Have we not done this before, Mr. Robinhood? What the hell is going on? And again, we have this article essentially telling us how on Thursday evening, interest in Dogecoin surged as it rose past 25 cents and the whole app collapsed for the whole day, 24 hours outages. So Dogecoin goes up by 91%, Robinhood collapses, can't trade Dogecoin, can't trade cryptocurrencies. Every time we have some sort of an unusual event, Robinhood can't handle the heat. What kind of a platform are you which you can't handle a little bit of volatility? I mean, that's the whole point of having an app where I want to trade something that's hot. So for me, it's quite clear. Robinhood is not a Ferrari. It's not a Lamborghini. It's not even a Mazda. It's not even a Hyundai. It's not even a Kia. It's just a bicycle. If you want to use bicycle for your business opportunities, go ahead. I don't think it's a smart idea. You definitely want to use a platform that won't screw you over when things get volatile. Again, allegedly, in my opinion, might be wrong. Yeah, I'm just saying my opinion. But again, Robinhood is exposed for being a very, very small player in a huge pond, so be careful. As always, a huge shout out for our Patreons, the channel members for being awesome. Thank you guys. We'll see you in the next video.